Cup comes to a close. The question is, who will then bring the content going into 2023? Hatem Dhiab joins us from Gerber Kawasaki. Hatem, you guys have a favorite, a pan, and somewhere in between. The market's least favorite today is Warner Brothers getting hit, down about 3.25%. What do you think's going on there?
I mean, it's a really tough stock to own. You know, it's been a tough year for David Zaslav. It's a big merger that he had to go through. He put a bunch of debt, I think about $50 billion on of debt, and he's got to still kind of merge all these different companies together, and it's just not working out that well yet.
Seems like you're in line with the market. This one you think is basically a sell compared to its peers?
Yeah, it's a dud for us. I mean, having 5-to-1 debt ratio is really not something that we want to own, especially in a time when interest rates are going up. HBO brand is really important and very powerful in Hollywood, but they can't really spend that much money on content going forward. Despite the early successes going forward, you can't see how much they can spend on content, which basically is going to hurt them, I think.
It seems like right now the advertising business is in a little bit of a tough spot. All these streamers are now bringing advertising on if they already don't have it. But then we're looking at all these core advertising businesses in the tech world, Meta, Alphabet, that are really under a lot of pressure. It's like the pie's been split up now, and how is that going to fare going forward if there's a slowdown in the economy and these advertising profits go down?
Well, you're absolutely right. Like, digital advertising goes down first. General advertising goes down first. AMC announced they're going to lay off about 20% of their staff last week. So you're going to start some of that slowdown affecting a lot of these platforms. And frankly, there's just too many of them, right? There's just too many streamers, too many apps, Paramount, Time Warner, blah, blah, blah. The idea here is that there's only enough dollars to go around, and whoever is going to have the best content is really going to win. And with budgets for advertising going down, they're going to look for really the best content that really kind of defines that brand.
Okay, so the favorite of the group remains Netflix. Tell me why, Hatem. Generally, is it just a first leader advantage? The stock market's been giving them a lot of love over the last 6 months.
Yeah. I mean, first of all, they're just a hit machine. I don't know if you saw that new show Wednesday for the Addams Family that came out two weeks ago. Crazy, right? 750 million streaming hours in 2 weeks. You know, it's basically in 2 weeks going to become one of the number 10 shows. And this 2022 has been fantastic. They had amazing shows. And then you got the fact that they're going to add some advertising. So for Netflix, for example, it's not going to be just about subscriber growth, but now it's also how do you kind of monetize better some of the subscribers that they have and add some advertising revenue to that. And that for me is really kind of a nice mix for continued growth and even being able to have more profitability than they have.
Seems like Netflix is making a really good comeback, gotta say. We'll see if they can get through $350. That's the big gap down level from the first quarter earnings that crushed the stock. So we're pretty much there, $30 away. Might be a little bit of a battle. That'll be a fun one to watch. Hey, where does Disney fit in, Hatem? I saw an insane video the other day of someone's Disney trip. It cost them like $3,500.
Yeah, I have a good friend who just came back. It's not cheap to go to Disney. That's for sure. I mean, Disney is having Bob Iger back, which it's a great news. But obviously, there is a lack of succession planning that hasn't worked out, and they still have to work through the last 2 years of Bob Chapek that really hasn't worked out really well. They've pissed off some creatives, and really they've done some damage, and the content hasn't been great either. So I think Disney has some work to do, and then you add some issues with cost of workers and the parks in Shanghai that are just barely reopening. The stock, I think, is going to have some tough few months.
All right. Okay. Could be a very interesting close to the year with Netflix with such a lead right now. Yeah. Appreciate it, Hatem. Always good to catch up. Thanks a lot. Hey, who you got in the World Cup?
Yeah, France, of course, my friend.
All right, okay. There it is.
Who else?
All right. Understood. Thanks, Hatem Dhiab, managing partner at Gerber Kawasaki Wealth Investment Management.